All right, there we go. Everything looking good. We are live. Let me know everything's coming through loud and clear. There's some weird stuff going on with YouTube at the moment. So, yeah, we'll go ahead and get started in the meantime. But if somebody would, let me know. So welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:04 p.m. Eastern Standard Time on February 8th, 2023. And remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right. So let's go ahead and just get started with TNX. So we did see that we got the bounce off the 200 simple. We didn't quite come down to the 200 exponential, which is slightly less important to me. We do see 1, 2, 3 drives of bullish divergence. 1, 2, 3 higher highs while we're putting in lower highs on price action. We then broke above the 821 and confirmed the bull cross. That's definitely a good sign. Now, we could get a situation like this where we just come up, put in another lower high, and then go lower after that. But we expect to see some kind of like relief rally after this. The follow through is what's important. So every time we're looking at a previous high or a previous low as a reference point, that's what we want to pay attention to. So in the meantime, right now, the main level to watch is 3.89. And it looks like we're going to try to push up there. We did leave a little gap behind right here, so definitely a possibility to come back and backtest that area. If we do see strength in TNX, though, we really want to watch DXY as well. And likely that means we're going to see some serious pressure on assets, and we'll really start to see like that musical chairs game come back into effect. So essentially what happened was we saw some of the more popular names or more beaten down stocks start to rally. We then saw the indices, obviously a lot of like the industrials and materials and the Dow Jones were looking good. And it kind of led us into this, whatever you want to call it, rally, potential bull market, etc. And it started off very concentrated in a couple specific sectors and some specific names. And over time now, it has just broadened out, and we're essentially seeing even the underperformers are just kind of popping off. Everybody's kind of taking their turn right now. And as we start to see it condense back down into a couple small sectors or stocks, big names, etc., that's where we're going to see, really what's happening with this trend. Is it just a reflex rally, a relief rally before we go lower, or is this the real deal? Obviously, the broader it is, the better, but essentially that's just part of the phase. As people are going down, a bear market's getting stronger, people are getting scared, they tend to get away from all that extra diversification and all that extra risky bets and stuff like that, and kind of condense their investments or trades into like more focused areas. And the same thing as we get more into a rally, as the rally pops off and just gets wilder and we continue to run to the upside and the trend gets stronger, people start buying all kinds of trash, just taking a shot because they're seeing massive gains and just letting stuff ride. And, the gambling starts to really kick back in. And that's the phase we're in right now. But that's not necessarily a bad thing. All it means is soon we're going to see people kind of take profits out of some of the trash that has really run and move it into some more important names. And then we'll kind of see over time if that diversification, if that risk taking continues, or if we see that condensation continue to happen and we see like 1 or 2 strong sectors. So very, very important, and probably going to be the trend of 2023. So U.S. oil has rallied up over the last couple of days, so that is solid. Obviously, we know always, like we just talked about, when we have a previous support level, it's very important. So here we lost the ascending support line, but we found perfect support right here on that same level as last time. So we technically have not put in a lower low. So now when we come up here, if we put in a higher high, that actually still looks okay for the retest of the 200 exponential or simple, possibly both. Again, we do see, with this same low right here, we basically have a little less energy was used. Now, it's not a huge divergence between the two, but it is worth note. Arguably, yeah, I mean, they're pretty much, if you have to like put your cursor over it and check to see if it's a lower low, just count it as the same, in my opinion. When we look at the 210 spread, not a lot to see right here. We see inflation coming down. Yeah, we're not going to mess with all that. I'm going to keep tonight relatively short just because of how glitchy YouTube has been. I don't want to be like trying to stream while it's having issues. I don't know what was going on earlier, but Google down like 8%. YouTube having some issues as well. Doesn't look good. Maybe they had to make some cuts. So Dow Jones still looking strong here above the 200 exponential, bull slope, above the 200 simple, bull slope now. I mean, it's basically just going sideways, but as long as we're staying above these two moving averages, still looks good. We are back testing the slope line. Oftentimes we'll get rejected here. It looks like that's what wants to happen, but really the key move on Bitcoin, on stocks, on pretty much anything that has run is eventually we're going to come down and we're going to put in a low. The question is, what does the buying look like when we come down to put in that low? Is it here at support? Do we come back down here and retest the lows and it's just like capitulation? Do we, never even get a chance to buy the low and this was it and we just continue trending to the upside? We're basically just looking for the trend to define itself so we have an advantage. Because when we're in an area where the market's flipping back and forth, we don't really have an advantage. So we could take a long position and say, well, we're above the 200, so we think it's going to go to the upside. And then suddenly we break down below the 200s. We've only moved a couple points, but, the picture has changed. And then we could consolidate around there for, a while, and people say, oh, no, it's bearish now, I don't want to be in it. And then we pop up again. So that's where you get chopped up a lot. So depending on your strategy, what time frame you're using, and how you manage risk, you have to decide essentially, do you want to enter into some positions with less certainty or lower probability of success, but be potentially positioned from a better area? Or do you want to take, less risk later on, but you have to buy potentially at a higher price? So it's always kind of like that sliding scale between how much risk you're willing to take or how much confidence you want and how good of a trade or position or entry or exit you're going to get. So SPY next doesn't look nearly as good, but still on top of the 200s. 200 exponential is bullish. Obviously the Dow broke above the 200s and then just consolidated for like weeks. We see here, this is the same time frame here on the daily. We've been consolidating above here for, literally since, the real break above, and we haven't gone below since November of last year. S&P really broke above and hasn't gone below since January. So we literally have months more positive action in the Dow. And again, the Dow let us out of, potentially the bear market, the downtrend, the whatever you want to call it. So right now I'm kind of looking at something like this for the S&P. We don't know if we're going to come up here and just put in another high and then it's going to look like a channel, or we don't know if that's going to be the temporary high and it's going to look like a wedge. It could go either way. We'll have to see how it plays out. Either one is viable for now. You can always, instead of just using a line like this, just grab your channel tool. Even if at the time it doesn't make any sense, it might when we get up there. Let's say we do continue to the upside and we see that's two pretty nice points right there. Excuse me. So let's say we do bounce through the heart line right here and we get through this recent high right there. This is just immediately going to be invalidated. Why did we even have it there to begin with? And then likely when and if we do pop up, we're probably going to find at least a temporary resistance on the top of the channel. So maybe somewhere like 441. The S&P looks like it could easily burst to the upside. If we see any kind of continuation, and I'm telling you guys, we don't want to be overly bearish or bullish on these markets right now, but I feel like way too many people are essentially trying to build a narrative where there's no way we go to higher prices. And it's super, super simple how we get there. We've talked about a bunch of times. All it takes is an itty bitty little bit of inflation. A couple prints in a row where inflation starts to tick back up and suddenly that's it. So I don't know. Not to mention, even if inflation comes down, a lot of companies might not bring their prices back down. So, if their costs go down, if their labor costs or material costs or shipping costs all kind of go down and they decide not to lower prices because they're still competitive, or maybe they have the market cornered, or they have a bunch more pricing power because they've, been relatively conservative raising prices over the last decade or whatever, we could see potential where actually earnings look fucking amazing because the costs go down and the profits just go through the roof. So we'll see what happens. I just don't understand how so many people can be so sure about the direction of the markets right now when honestly looking at these markets, we see a lot of moves before they happen, but right now everything looks like a possibility, honestly. All right, so looking at the Qs, triple Qs here, still got a resistance above head, back on top of the 200 exponential and simple. Again, just starting to kind of consolidate above this level, showing some short-term elevated levels. We don't see initially like signs of exhaustion yet, no bearish divergence or anything like that, but we do have the hard sell, and this is definitely starting to roll over. So if we exit the bullish control zone here, which looks like we're probably a day or two away, we could potentially be looking at something like this, a pretty aggressive peak and then trend to the downside, pretty aggressive peak and trend to the downside, obviously corresponding with the hard sell and exit of the bullish control, hard sell, exit the bullish control. Here we get kind of a messy signal. It's like the two different signals at different times. That's not nearly as reliable. But the truth is, the opposite could happen too. We could just consolidate here. This could cool back off. We get a bullish reset, and then we start into the bull market. So again, right now, if we're going to manage risk off of the 200s, this is the time to do it. We're right here. We're at the spot. Russell is next. So we obviously have this pretty strong resistance here. We came up, we almost got to it. We're consolidating. This has been above the 200s a little longer. We do see we have flipped both of them bullish for now. We see a sell by sell. It's kind of spaced out a little funky right here, so it's not as reliable. Typically, we want to see them like spaced out pretty even. Matter of fact, here's a perfect example. Sell by sell, all right next to each other, and that was right at the previous meltdown right here. So that's what we want to see. Sell by sell real close. When they're kind of like jumbled like this and there's a big space between them, not nearly as reliable, does not mean that it's not going to play out. We're very close again to exiting the bullish control zone, probably in the next day or two. And then when that happens, what we would expect is a backtest of the previous resistance here, the 200s, and then we'll see, does that hold or does it fold? All right, so let's jump over here now and take a look at some DXY. So DXY, the other half of the tag team, potentially back again. A bunch of bullish divergence on the way down here. Hard buy signal coming out of the bearish control zone. Blue slope line, bunch of green histograms approaching the zero line. Potentially, well, it is technically above it. We have the 821 bull cross. Looks like we're going to get our reversion to the mean. And we know what that is. It's just a back test of the 200 exponential and 200 simple. So obviously we're on our way there now. The real question is, are we going to back test them, get rejected, and then go much lower? And again, if we see strength from the tag team, we know that that's at the expense of risk on access, including gold. So Tesla is next. Tesla had a nice little rip up here at resistance. So this is the completion of our second entry on the trade, or second target for the trade setup here, which again is just a backtest of a 200 exponential and simple and a backtest of the macro 236 in blue here. So we came down just shy of the 0.5. We took our entry at 108. We doubled down on the position once we got back above the 821 and got the bull cross at about 135 roughly. And then took some profits along the way on the back test of the channel, and then now at the top as well. So really nice run there on Tesla. If you go back to that video, I specifically said when we were down here at like $106, I won't be surprised if a couple weeks from now, or maybe I said a month from now, Tesla's up here at $200 and everybody's screaming, oh my God, what the hell? Well, exactly that is what happened. So we hit 200. Congratulations on anybody that got in on the Tesla I hate Elon hype train. And it was very obvious that was about to be the bottom. It was full on. Everyone hates Elon. He's dumping on our faces. He's a terrorist, or, whatever name you could possibly call him, because, he just now suddenly doesn't align with your political beliefs from before. Okay, sure. So the green energy guy making all the electric cars is now the devil. All right. Okie dokie. So anyway, Microsoft is next. So I had a big little pop to the upside based on the AI announcement. So gapped up and then sold back down to fill a gap, which is good. Doesn't mean it's going to just immediately melt back down. We do see a little bit of signs of some temporary exhaustion potentially, or topping. And this is pretty typical for Microsoft. It almost always gets like some kind of like gap up move at like the top of the, this is, we don't have to be a scientist to look here and say, oh, look, we gap up right here and then we roll back over. We start gapping up here and then we melt down. We gap up here and then we go on a little trend. Here we gap up. It's just literally over and over. It's just constantly gapping up and then melting down afterwards. So I don't know, maybe we see continuation. Probably we just do the same thing we did every other time after the gap up, which is just go lower. So Apple, decent little move, consolidating above the 200s, hard sell signal. Look, a lot of this stuff looks like it's about to roll over, and that's fine. We're basically like in the area where if you're a bull, you actually like don't need to do anything. If you can just hold up price long enough, a lot of this stuff actually just starts looking good. So Google obviously had the initial gap up above the 200s, consolidated a little bit, and then broke back down. Holding this area is crucial. If Google doesn't hold this area right here and breaks back down, you know, which there is a decent amount of support through these levels, but if it breaks back down here, you know, we should fully expect that it's going to come back down here and retest the lows. And probably Google is just kind of like sounding the alarm for everything else going on. So we'll see. If we lose this 382, if we lose the top of the channel or the neckline or whatever you want to call it, it's going to look really bad. And we talked about this scenario, how it was going to come back down here and backtest. If you're super bullish on Google and you're just convinced Google's amazing and it's awesome and this is the best price ever, I mean, this is not a bad place to enter, you know, very close to the 200s and also at a key support here. Now, I'm not convinced Google's not going lower. I'm not convinced that this is the best price we're going to get on Google in the next month or 3 months or 9 months or whatever time frame is. But I could understand if you could build a legitimate case from this area. I mean, managing risk off the 382 and both 200s seems like a pretty good idea to me. But what do I know? So Meta, I mean, the obvious move on Meta is that, you know, we consolidate up here for a little bit. Distribution takes place, aka, you know, the price stays propped up at this level. A bunch of selling happens. We see, you know, probably some pretty high volume, which obviously we saw already after the gap up. So we see like some kind of decent like volume up here and then, you know, break down, come back, fill the gap, retest the 200s. So, I mean, realistically, the real play right now is a short 20%, in my opinion. Now, it's not as good after we just had that 5% down because it essentially turns the short from like 25 into, or about 20 into, so turns the short from about 20% into about 15, 16%. So definitely a big difference, but I mean, that's the trade, honestly. That is the trade. I mean, everything else has pretty much played out nicely. I'm going to get rid of some of this stuff that's not really relevant anymore. So that was the continuation trade, was 45% off that level. I mean, there was a million things that played out. Starting back down here from the gap fill and then the continuation trade. And now it's all said and done. And honestly, I think that the real trade is just in the other direction now. And I mean, I wouldn't run the stop loss like ridiculously tight on this either, and I wouldn't necessarily enter from what's been acting as support, which is that 0.5/236 depending on the time frame. Yeah, I mean, it's about a 2-to-1. You know, arguably it's a neutral trade, so it's really not even worth messing around with at this point in time. You would have to like pretty much tighten it up and say if it closes above like 191 or 2, that gives you a 4% stop loss with 17% downside. So there's not a ton there. It's not a ton there. I mean, it's still like almost 4-to-1 risk reward ratio. So Amazon is next. So again, we see the gap up. We nail the 200 exponential and simple. We see the gap up. We nail the 200 exponential and simple. And then we continue to melt down afterwards. So we just want to be really careful here. I mean, this was the gap fill right here that we have been talking about and the back test of the 200s. It played out and then literally like that was it. And then it gap back down. Market participants, market makers push the price up here to fill the gap and exit their positions, you know, without taking that L. And then the price can go down again. So if you're going to, you know, ride the wave on the way up, make sure that you don't ride it on the way down. And honestly, all these earnings were atrocious. I did the Amazon, you know, estimate ahead of time and it completely missed. It was total trash. They went negative for the year as we expected. I don't even know if they've actually like updated this yet. Oh yeah, okay, so the Q4 is in here now. So the net income was 278 million and they needed 3 billion to be positive. So now it's updated. 2022 revenue for Amazon, 513 billion, negative 2.7 billion. Profit margin. Oh, you know what? I think I did in the follow-up video. It was updated. So yeah, exactly what we said happened. Amazon is officially a $500 billion company that doesn't make money. And by $500 billion, I mean in a year. $500 billion in revenue in 1 year. So Bitcoin futures, not much has changed here. We did get the touch of a 200 exponential. Seems like, the clear target would be the retest of a 200 simple, and then also the retest of the 21. So 22K is a pretty clear target. We see some temporary exhaustion, a bunch of red histograms, hard sell. We exited the bullish control zone. So the place to be right now is short. Now, the real question is the short going to bring us just down to 22, which is 4.5%? Or are we going to come down here and fill this gap, which is 14.8%? So, obviously, like anything, it's going to happen in stages. So we know basically stage 1 is a retest of 22, and then the bulls get a chance to save the day. And they could save the day anytime they want along the way. But these are the areas they're going to try to save. Next, we have, basically the top of that and this resistance through here. That's 9.5% down. And then, of course, the last one is just that gap fill. So it's basically every 5% down from here is a key level. So as the slinky is going down the stairs, any stair could be the last one. We don't know if it's going to be. We don't know which one it's going to be, but we should pay attention to it. But we see clearly 100% that Bitcoin is losing momentum to the upside, at least temporarily. So on the daily, the spot market, we see the same thing. The difference being all of our moving averages are at different levels because of, obviously everything being open over the weekend. So this was the bounce that we recently got as we hit the blue slope line on the TDMACD. We got that recent bounce up. We put in another lower high. We got rejected at the 8. So the clear target would be the 21 at 22,556. After that, it's 200 exponential, 21,458. And then we see down here that 19,762, which obviously those levels to some degree correspond with these same levels we talked about, with or without those same moving averages. So lots of confluence. And again, it's all up to the bulls where they want to buy in it. I mean, they can sit here and try to prop up the price as long as they want on like shorter time frames and everything. And honestly, they've been doing just enough. But everybody knows, like if you've ever been in a relationship where you're doing just enough, or the person that you're in the relationship with is doing just enough, like eventually the shit's going to implode. It just doesn't work. If you're not growing, you're dying, and that's it. If we're not, building, if we're not attracting new buyers, and sometimes the price can just do that, like price go up, momentum attracts buyers. We're not really seeing that. We're not seeing crypto market cap like surging. We're not seeing, that interest come in. Matter of fact, it's the other thing. Nobody trusts crypto right now. It's a big scam. The truth is there's lots of stuff that probably hasn't imploded yet that will. Prices being higher helps. So I don't know if this is CZ Binance, Tether printing up some extra crypto and buying up Bitcoin to save the price. I don't know what it is, but the truth is we got to be real careful here. So there's definitely a leg down on the 4 hour. We've crossed once, we saved it, pushed to a new high, with the wicks. Obviously we printed no divergence or anything like that, because technically we did close a lower high right here, even though the wick, and it is all based off closes. So then we crossed 821 bearish here. We try to say it again, lower high, and now we're, bearish again. So eventually we're just kind of going sideways here. Eventually we have to either break out to upside or the downside. Seems more likely, the 200 exponential and simple moving averages are basically like a magnet. And we're basically at this point in time, there's one candle in between 21,500, which is the 4 hour moving averages, and where we're at right now. So we're one candle away from that drop. So just get ready for it. It's not a big deal. Doesn't mean that that's not a buying opportunity. The truth is, the longer we spend above the 200 exponential and simple on the daily, the more bullish I get. And right now we're seeing the stochastics like trending pretty powerfully to the downside. I mean, if we look at this, we were up here at the cross at 90. So we have trended down from 90 to 40 with the blue stochastic. Obviously the pink one's lagging behind here. We're going to get a bounce at 20. I mean, it happens. It happens every time. We know that. Maybe that won't be the bottom, but we'll get a bounce at 20. So we went already from 90 to 40. That's pretty aggressive. Probably going to bounce 20. So not that far away. And price action is basically going sideways. So right now, the histograms cooling down, the stochastics are cooling down, and the price action is going sideways. Now, it doesn't mean that this isn't distribution. It doesn't mean that we're not going to come back down here to the 200s. What it means is when we get there, I expect support. And part of that support is going to come from me buying Bitcoin. Because honestly, I think, as long as we're above the 200s and they have a positive slope, we come back down to it. I'm going to give it a shot. I'm going to manage risk off the 200s, and then we'll see what happens from there. Obviously, if you do the same thing, you'll lose everything. And yeah, you'll lose it all. So just don't listen to anything. I mean, you can laugh at my misfortunes as I lose all my money to crypto scams. But, I mean, don't be a sucker. I'm just doing it for your entertainment. So Ethereum back on top of the 200s, looking good, retesting the highs. I mean, this is pretty strong resistance through here. Looks like it wants to burst through this 1776 through 8. Again, cooling off as price kind of like trends up or goes sideways. Crypto actually doesn't look bad right now. Now, if the stock market just starts to implode or whatever, if suddenly everybody realizes like, hey, actually the Fed isn't landing the plane, that like Jerome Powell is just actually the Joker, like maybe things change. Total, it's like that old joke. The pilot like jumps out with the last parachute. Never mind. I'm not even to tell it because it's like I'll probably get canceled. Google's like, actually, everything's fine. We just shut down your stream because we don't like you because you're controversial. I mean, if they get Joe, they're definitely gonna be able to get me. Come on. So total market cap still trash at 1 trillion, barely just hanging on for dear life. We are above most of the moving averages now. 821 is crossed back to the upside. It's definitely a good sign. The longer we spend at resistance, the more likely we are to break through it. So, I mean, when I look at this, the next target to upside looks like that 1.14 trillion, which is nothing. That's like 10%. So who even cares about that? But after that, it's like 1.2728 trillion. So we're talking about like a 25% move. Bunch of green histograms, blue slope line, hard buy signal, aggressively angled stochastics. I mean, honestly, crypto looks like it really does want to push up here. So as this like bearish or bullish reset rather takes place, I'm not going to get bearish on crypto. It actually looks good to me. If it would actually have a retracement, it would look much, much better to me because we know what it's doing right now is unsustainable. Just a small correction and then bulls stepping in, buying support. That's all we need to really move to the upside. And it could really, honestly, it's early to tell, but be the end of the bear market. And like, that's craziness. Well, I mean, markets are crazy. If they were rational, everybody would make money because you would just do the easy thing, but they're not. So Bitcoin dominance on the weekly, this is everything. We're right around the halfway range. I do expect it to continue to the upside as we have momentum on our side. We do see some, moving out the risk curve going into trash cryptos. Here, if we take the stable coins out of the picture, we're at that ascending support. We are starting to cross down. So what does this mean? It means as we continue to rally, people are, instead of investing in Bitcoin or instead of holding, based on the other chart, stable coins, they're buying just any crypto trash they can get their hands on. So the trashier the crypto, the better it is right now. If you're a degenerate crypto bro gambler, which I mean, I assume you all are, you wouldn't be here right now. That's a joke. So Matic, still staying pretty strong here, continuing to just grind to the upside. We talked about this potential, next move up to the 786. We're consolidating above the 618. I mean, we took out that high right here. We closed a slightly higher high. So honestly, it looks like it's going. It's 43% upside, 17% stop loss, 2.59 to 1 risk reward ratio. We're above the 200s. They're both sloped through. So we're in a bull market. We need a 2 to 1 risk reward set up. We got a 2.59. So let's fucking go. Matic, Polygon, Moonshot. It's probably going to 0 though, honestly. BNB continuing on here just forever, just slow grind. I mean, the real area to watch out for is at 0.5, but we're almost there. 350. So another like what, $22? We're almost there. All right. So are you guys getting a pretty clear stream? You're not having any issues coming through here? It's a little bit like choppy on my end, but I do have excellent connection. So hopefully whatever trash YouTube is trying to roll out, probably some woke BS. Okay, so what do we got here? Okay, this was a request. We'll just randomly do it now because it's on the screen. So this is REI, Ring Energy, from one of the members. And I start off right now by just looking at this chart and just saying, I mean, congratulations. Every time I think that you guys have found the worst charts, you find some more. So, and I never mind looking at them by any means. And this one is legitimately really bad too. We'll get to that in a second. So REI on the monthly here, we don't have a lot of history, okay, and definitely some sketchy stuff in the beginning here. So let's go back to, oh, actually it's decent. That's 2007. Yeah, that's pretty good history actually. So 2007, it went pretty crazy right here. We left behind this little gap, came back down, fill it. There obviously was like very little volume taking place at the time. It got a little more consistent over the years. So we did kind of like double top right here, and then we pushed up one more, essentially put in a hard top right here, like a little triple top situation, and then took out that previous swing low. So now after that, we took out the all-time, IPO, whatever, low right here. From there, we surged back to the upside pretty freaking aggressively. Keep in mind, this is a penny stock, so you'll definitely lose all your money if you invest in this. You might be able to get away trading it, but spoiler alert, it's about to go to zero. So here we see the 821 bull cross here, comes up, and then just complete dump on your face, 821 bear cross. So we have an 821 bear cross. We don't have any 200s because we're on the monthly right now, so that's not good. We're at support right here. We see a pretty clear support line right there. And then before that support line, there was one candle up, two candles up, and the price was at 65 cents. So just fully be prepared. The same 239% to the upside. If you captured that, I might want to lock some in, or just get ready because somebody else is getting ready to dump a hot loaf directly on your face, because it's 70% to the downside. So we're two candles away on the monthly from 70% of your money going to zero. Well, technically just all your money goes down 70%. None of it goes to actual zero, but it sounds more dramatic when I say it that way. Now, on the positive side, we are above the slope line and it's blue. The end. All right. So now on the weekly, I just figured I'd mention that. I mean, it's not going to change anything. It still looks terrible, but it's worth mentioning. So here on the weekly, we get a more clear picture. We basically came up to 200 exponential, got rejected, and we're trying to hold on to 200 simple, but it's not going great. Matter of fact, we're kind of under it right now. So now we're under the 200 exponential, the 200 simple, the 8 and the 21. They're all crossed bearishly or sloped to the downside. So not good. Definitely not good. Now the 200 simple has crossed below the 200 exponential, which says the trend is actually getting like a little bit tired. That's the downtrend. But oftentimes we still go to new lows or new highs accordingly. So here we are at a very clear support, barely hanging on for our lives with 2 monthly candles, or in this case, like 6 weekly candles, propping us up from 65 cents or like a 70% downside. So if you were like, hey, what's a really good way to like light your money on fire? I would say invest in REI. And you're like, short, medium, or long term? I'm like, yeah, for sure. It's a great way to lose 70% as quickly as possible. You're like, I don't know if that's going to be fast enough. Should I just light it on fire? I'm like, trust me, even that's not going to be faster. So on the daily here, we see the picture very, 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 very clearly. It's like the most elaborate head and shoulders pattern I've ever seen in my life. It's like left shoulder, then it's like still at the left shoulder, then like one more left shoulder, and then the head. And then we're like, here's a right shoulder, and then a right shoulder. And it's like, should we put one more right shoulder in or just break down right now? I don't know. Could go either way. But that's how I see it. And it's, that it's really more about like the actual mentality of what's taking place here. We have this like pretty clear line in the sand support, and you could say, well, actually, it should be right here. Sure, maybe, you can do it however you want. You could put both if you don't like where I'm putting it at, but it's very clear that like this little zone right here is pretty much a life or death. So where we're at right now is not good if we go any lower, but if we lose like that $1.80 level, that's like pretty much death, for your money, not for you. You'll still be fine, probably sad, but your money will be dead, 70% dead. It'll be less alive. So yeah, it looks like trash. It's below the 200s. It's below everything. It looks like it's getting ready to melt down. Now, for the record though, there was a time when Binance looked like it was about to absolutely melt down, and I put on a trade setup. I didn't actually take the trade because Binance sucks, but I put up the trade setup and it was like 70% to the upside, and we're now like 50% into that. Okay, so just because this looks like trash and there's a very, very good possibility it's going to take away 70% of your money if you buy it, doesn't mean it has to happen. It could easily, and the sign will be, if I'm wrong and this is actually not trash, not based on fundamentals, based on technicals, the sign will be it pumps up 27%, consolidates at the 200s, and then eventually breaks through them and takes out, this little short-term resistance that has rejected it pretty hard right here, okay? Twice in a row. So the way I look at it, we're basically trading in this channel. You're at the bottom of the channel. There's like 20 to 30%. I mean, more than that, really. It's probably closer to 50% upside. Yeah, like 47% upside. We'll call it 50. Round off. I'll give you the benefit of the 2%. So 50% upside for sure. If we break through that, it starts looking good. In the meantime, you want to take a little scalpy poo? You want to buy support right here and just hope that this isn't going to be... I mean, honestly, it could have broke right here. It didn't. Could have broke right here. It didn't. And then could have broke right here. It didn't. Could have broke right here. It didn't. So, I mean, you could take a shot. I mean, I don't know. God. Here's the thing. I always would just rather look for a better... oh my God. Did I really just do the same thing twice in a row? I remember my first time using TradingView. I'm new here. It's my first day. I was trained by an intern. Okay, so this is like the ideal setup right here. And not by ideal, I mean for this. You got 50% upside to the top of the range. If we break down from here, maybe you want to get out like immediately. Maybe this thing scares you, I don't know. And then try to buy the bottom support right there. So, obviously don't go too hard on the first entry, because what likely will happen is, realistically, it'll probably break down to here. Damn it. Can there not be a middle ground between all the way zoomed in and all the way zoomed out? Oh, it's probably because of that. Okay. So something like, God damn it. I swear, TradingView's like, find out everything he hates and make it happen while he's live. It will be hilarious. The ultimate troll. So, that's potentially enter off that 80% upside, and then at that point in time, it's a coin toss, 80% upside or 70% downside. That's 50-50. You either gain a lot of money or lose most of your money. So, maybe that's the way to go. I don't know. Look, we're reaching here. Okay. This thing's probably going to zero, but buying support, never a bad idea. I prefer it's when you're above the 200s. But again, I mean, the last time we tested this was December 2021. So we tested December 2021, July 2022, September 2022, and then multiple times in November, December 2022. My normal way of doing things is buy support, sell resistance. When you're in a range, trade the range. So the range is a couple years long, and, in between the white and the top yellow line. We'll turn the other one, we'll turn that one orange. So, honestly, that's probably the play, but you just got to really, really be careful on this, just because the trapdoor could literally show up any day. And I have no idea what this is. I think you said it was, what, ring energy? I don't know what it is. Yeah. All right. Speaking of trash that I don't want to own, let's look at gold. No, I always want more gold. That's a promise. For my teeth, of course. Obviously, I'm working on a grill. XAU. Do they still have grills? Did grills go out of style? Are they not doing that anymore? I'm going to bring grills back. So, if you guys play your cards right, I'll be rocking a grill next time you see me. Let's just see. So XAU 821 bear cross above the 200s. So gold is basically like the leader of this whole entire thing. So whatever gold decides to do as it like sells off and comes down to retest the 200s is like probably what everything else is going to do. So gold was like consolidating here, got the initial push down and everything. Probably going to consolidate a little bit. Then maybe one more leg down, whatever. Whatever happens with gold right here, I mean, it's basically been like holding the hand of the market. Like, hey, follow me. The dollar's going to be weak. Like, gold has been pretty damn trustworthy lately. So, silver already got the big move down to the 200 exponential, 200 simple, slightly lower at about 20 bucks. I mean, this was textbook as it comes. We push up to like clear resistance. It's been resistance for like 100 years since the day of the dinosaurs. And then we consolidate here, clear distribution taking place. We don't have like the volume spike that we would normally see, but there probably was one. And then we see one last push up right here. The throw over gets clearly rejected back to the bottom of the range. And then we see, you know, the actual like measure move breakdown. So that's what I'm expecting on basically everything. But that's not necessarily a bad thing. In the meantime, the histogram has come down to like respectable levels. The 821 happened, but we're just finding support at the 200s. The stochastics have trended all the way from basically the bullish control zone all the way down to, you know, essentially the bearish control zone. So that's pretty bullish to me. You know, the last time we were down at this level, and obviously silver's trash. Don't get excited about it. It's complete garbage. The worst investment you could ever have in your entire life. Matter of fact, in all the years of human existence, they've been trying to figure out what to even do with silver. 0 uses. Absolutely none. 0 uses. They stopped even using it in jewelry because it's such trash. They just use aluminum cans now. They just crush them up, melt them down, and they've completely replaced silver. So it's trash for sure. But that being said, support right here at 18 and stochastics are down here at 20, bouncing the bearish control zone. Then we have push all the way up here to 25. And now we're back down to 22. So it's like, oh, we rode it up pretty high, but then we came back down to 22. But now here we are. We're at the same level. So the stochastic was at 20 right here when price was at 1865. And the stochastic's at 20 right now when price is at 22. So that's a higher low. That's a bullish reset taking place in real time. It's okay to sell off. It's okay to break down. As long as when you hold a higher low. And then you see continuation to the upside. And then silver goes to $50, then $90, then $250. And, shit, I don't even know. Maybe they'll stop making jewelry out of aluminum cans and start doing it out of silver again. They'll bring it back. Or maybe they'll discover a use for silver since there's absolutely 0. There's none. And I'm sure there's some idiot who just found the channel who's like going to be watching this video and be like, you're so stupid. Silver has lots of uses. Idiot. You're dumb. Do your research. I'm being sarcastic, so glad we got that off our back. All right, so GSG. I'm about to get out of here. What time is it? 42. All right, we still got a couple minutes. So GSG, our combination of commodities and energy. So we broke down, back down to support here once again. Of course, it holds very nicely. We're trying to push back up once again to the bottom of the channel here. So, you know, we were consolidating at this level. Then we had like a little false break. Then we had a real break. Now we're consolidating at this level. So, you know, if this was like the Slinky's first step down, then it goes down to the next step. And then, it, you know, the tail whips back up. And then likely it's headed down to the next step. In my opinion, this is getting weaker and weaker. We're below the 200s. We're clearly in a bear market as they have flipped red and pink respectively. So it's just a matter of time before we put in a lower low. Straight to 0. LNG, Cheniere Energy, consolidating at the 200s. Below them, doesn't look great. Very close to confirming into a bear market. Very, very aggressive uptrend. See, here's my problem, okay? If you look at most stuff, it just did this recently. And now we're like here. We're at the decision point, okay? So if we're going to get bullish, we're only this far from the top. So it's like, oh, we only have to go a couple percent to like figure out, you know, if we're at new all-time highs and we're in a blue sky breakout and we're going much higher. But like the problem is, and I'm not saying that we're going to like come back down here and like retest the lows. It's not going to happen, but that's 81%. So the risk now on stuff that looks like this, which is a lot of stuff, it's basically everything on either a daily, a weekly, or a monthly, the real risk is to the downside. So if support holds and we start consolidating, get back up, and then start moving back to the upside, life is easy again. And then it doesn't matter. We don't have to do technical analysis. We can just do like the monkey dartboard trick or like the goldfish trick. I don't know. I made that up. It's probably not a real thing, but however you just randomly like pick stocks or whatever. So MOS is next, Mosaic Company. So still super sketchy, obviously, by this move right here. Seems like some blatant glitches. It's a glitch. Definitely not manipulation. Still looks terrible, though. Lower highs consistently and pretty clear support. Basically looks like a giant descending triangle, and we are below the 200s. Doesn't mean we don't get a little pop-up right here at some point in time, but I think it's very unlikely that we break above 62. More likely that we revisit the lows. Probably during aftermarket hours too, when there's nothing you can do about it. And, you know, maybe get liquidated and then price pumps back up 25%. I don't know. I mean, it's not going to happen again, right? It won't happen a second time. Surely. AMD is next. So we got the breakout consolidating above the 200. It's half the move, still kind of doing its thing. Hard sell, looks close to exiting the bullish control zone. I don't know if it's going to bounce it again. It bounced it once. We'll see if it bounces it again. AMD is like pretty good at hyping. And Jim Cramer's all like, oh, yeah, tell me more. Tell me more about your great company. Oh, yeah. Oh, I'm so hard for AMD. I'm an investor. Oh. And then like a couple days later, it kind of just like the excitement dies off. And they're like comparing it to Intel. I'm like, dude, I can compare my shoe to Intel. And like my old shoe looks like a good investment. They're like, is that real leather? No, it's fake. Well, it's better than Intel. I mean, that's trash, right? Could we wear the shoe? I'm like, I guess. They're like, yeah, it's better investment than Intel. Intel's garbage. So, meanwhile, the government's like, here's $100 billion. So Visa, in the process of our breakout measure move, still looks strong, starting to aggressively spin those 200s to the upside. So, I mean, this is juicy. It's playing out perfectly. Congratulations to anybody that's in the big V. At the 786 now, so if it's going to top out, it's probably here. If it goes higher, the 886, probability of it continuing on is very, very high. So realistically, I mean, it's too late to get in this now. Never get in Visa now. You missed your one and only opportunity. Yeah, I mean, another like 10% back to the highs. So there's no real setup to try to get like a continuation trade now. You got to either get it on a back test if we have one, which we kind of already did, or, buy into a blue sky breakout. Or just save up, buy a van, live down by the river. That's good too. I mean, if you want to set your goals a little lower. So ACB going to zero, as expected. I did buy some here, and now it is immediately going to zero, as expected. We did discuss that many, many times. It's very close to zero already. It's at 98 cents. So it can only go down another 98 cents before it's directly at zero. So probably that. Yeah, it looks terrible. Looks absolutely terrible. So yeah, probably just going to take the little like 2% L on that. It had like one day where it looked good. And it was like, oh, we're doing it. And now, of course, it's going to zero. So probably just don't buy trash bot stocks, honestly, no matter how degenerate of a gambler you are. And if you are going to do it so everyone can see, so we can at least all enjoy it. All right, so yeah, I think that's it for today. I did a breakdown. So check out Home Depot if you're into that stuff. Yeah, okay. So that's it. That's all I have for today. We ran out of tickers. We did them all. All right, so good to see you, Durwood. J-Hoff in the house. All good here. Appreciate that, brother. Probably should have looked sooner in case you were like, we can't hear anything. Streaming perfectly, no glitches. Maybe that's what it was. Maybe YouTube was updating their system to fix their trash glitchiness. That could have been it. Take a look at SSNC. Yeah, we still got a couple of minutes, actually. It better be in a bull market. I'm just kidding. I'm just joking. I'm sure it's going to be terrible. Is it SSNC or SSNC? Because I'm not getting anything for SSNC. Oh, okay, my bad. Yeah, I see it. Yeah, all right. SSNC is the ticker. SSNC is like the actual name. Okay. All right, so we'll just zoom out here to the monthly. So pretty strong. We got history going back to 2010. Obviously very nice here. We do see our first bear market correction. There was like a brief one right here. Pretty aggressive. Back above the 21 end the 8 for now. Still working on trying to get the close. Was inside of the bearish control zone. Excuse me, a couple of green histograms in a row. So it doesn't look terrible on the monthly. Could kind of go either way. Weekly, it looks like a lot of stuff that we've been looking at, where you're just in this very, very clear bull trend. We break down and lose it, and now we're back testing it. So, you know, are we looking at the Bitcoin chart? Are we looking at SS&C holdings right now? I don't know, because on the weekly, they look exactly the same. So we flipped the slope line blue right here, bunch of green histograms. We're inside of the bullish control zone. But I mean, we're at resistance. So if you're going to manage risk, manage it off this area and you'll be good to go, because you're going to find out real quick whether this thing's going higher or lower. But again, it looks like everything. So like anything we've ever said about anything with this exact same chart, which is like 95% of the stock market right now, like that just applies to it. I mean, there's nothing really to see right here. There really isn't. Oh, there's something we could see. So it just had earnings. What was that, yesterday? And I mean, they just came in line. They did just enough. Congratulations, you did just enough. So yeah, I mean, it just like pick your poison with any of this stuff. I mean, if you're buying into it right now, you're buying into resistance on the weekly. You're buying into like this resistance here. It's 32% off the highs. So still a little ways to go. I mean, realistically though, I mean, you want to buy off of like the 200 retest or something like that. It might not happen right away, but we know it's going to happen eventually. And if when it comes back down, it doesn't get all the way to the 200s and gets bought up and momentum starts shifting back to the upside, you know, probably just buy into the momentum. I don't want to buy into momentum after it just did this though, just because there's just a million other things you could do. You know, after something just like crossed 821 bullish, shot up like 23%. Matter of fact, it looks like it's getting ready to top out here with this little gap up candle back test. I don't know. Could go either way. I mean, it could keep running. I mean, there's nothing really like everything was priced in. It did exactly what it was like supposed to do. So it's like, oh, here's what we think we're going to do. And then it's like, and we did it. So I guess that's technically bullish, because most stuff like has had trash earnings and has still looked okay, like price action wise. So yeah, I mean, it's really just discretionary at this point in time. The truth is, like a lot of, if you get this kind of setup right here, like your real setup is like off of the higher low here or the 821 cross or something. Once you're back on top of the 200s, you're basically just saying, okay, I'm convinced this is going to like flip into a bull trend and then we're just going to go higher. I would probably wait for the opportunity to present itself, which is it might not. It might just immediately go to a million overnight. It's 65 now. Maybe you own a couple of them, so you just become like 100 millionaire or whatever, and then you're like, I'm glad I didn't listen to that idiot. Definitely could happen. But what, you know, probably happens is we run into resistance somewhere around this level. I don't know exactly where it's going to be. Could be now, could be slightly higher. And then probably we see some kind of a pullback. And then you want to see it find support at the 200s. And you're going to be like, wait a minute, you just draw the same thing over and over all the time. Yeah, I know, right? It's that easy. For some reason, though, other people just can't manage to do it. And then once we break through there, you know, your measure move basically takes you to new highs. So that's kind of the setup you're looking for. So, you know, if I was anybody who's looking to invest/trade SSNC, ticker symbol SSNC, you know, I would be looking to buy the 200s on a back test for like what amounts to an inverted head and shoulders pattern with a potential breakout measure move up to like 85. Or, you know, honestly, you could just slap on a little fib action from high to low and just see how nasty it gets. 1.236, 97, you know, 1.5, 115, 1.618. Golden extension, $124. Probably goes to zero though. Probably, it's matter of fact, after hours, I think I remember hearing this already went to zero. So I don't even know where looking this is. You probably knew it went to zero and you're like, oh, am I going to get my money back? But no, honestly, J-Hoff, it doesn't look bad, man. It looks just like pretty much everything right now. So it's kind of like either wait for confirmation, look for a better entry, potential trade setup, or just close your eyes and buy, which is not my style personally, but hell yeah, Durwood, good to see you, man. Appreciate you. You have a good night too, man. Of course, yeah, glad to do it. I was having troubles. Like YouTube literally wouldn't even load up like any pages, any screens, any tabs. Like I couldn't do anything. So I didn't think we were going to get the stream tonight. So this was just honestly perfect timing, which would have worked out okay anyway, because I have something to do here shortly. So, but I'd rather do some stream than no stream. But yeah, we'll go ahead and wrap it up there. And I've been putting out those static videos. Hopefully you guys are enjoying them. Check out that Home Depot one and, you know, some other ones as well, but less relevant. We'll have some more of those coming out as well. Just looking for some nice little potential like advantages fundamentally for some of these like quick, like 10 to 20% pumps. Hell yeah. Good to see you, Crypto Deli. Everybody have a great night. Appreciate you all tuning in. That's it for me. All right, crypto trend trader is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. This is for entertainment purposes only, unless you want to live in a van by the river.